The story of America's financial future begins not in Wall Street trading rooms, but in the silent hum of data centers and the roaring engines of oil rigs spread across the nation. AI is rising with a force that feels almost unstoppable. A wave of intelligence reshaping everything from personal assistance to national defense. Energy, meanwhile, remains the lifeblood that keeps every home warm, every city lit, and every business running. This decade isn't defined by a single dominant technology, but by the collision of two giants evolving at the same time. Investors across the U.S. wake up every morning checking the same two sectors: technology driven by AI and energy powering the economy. Some believe AI is the ultimate future, a force that will rewrite the meaning of human work. Others argue that without stable energy infrastructure, none of these digital dreams can exist. The truth lies somewhere in between, forming a relationship more complex than competition. As America enters 2026, the divide between AI and energy becomes not a battle, but a balance shaping how wealth will be built. Every major economic shift in U.S. history has come from a combination of brains and power. The Industrial Revolution fused machines with steam. The digital era fused coding with electricity. Now the intelligence era fuses artificial intelligence with global energy supply. Every dollar invested today is influenced by this dual-force momentum. Silicon Valley accelerates innovation, while Texas and Alaska solidify infrastructure. Americans love daring technology, but trust reliable power, creating a financial environment that embraces both risk and stability. The beginning of this decade showed how volatile markets can be when one sector relies too heavily on hype. AI companies saw historic surges, pushing valuations beyond imagination. Energy companies, though slower, offered consistent dividends and stability during uncertain times. As these two sectors grew side by side, U.S. investors realized the future was not about choosing one. It was about understanding the role each one plays in shaping national prosperity. AI's influence touches every screen, every sensor, every automated decision across the country. But energy's influence touches every home, every factory, and every moment humans need power. One sector captures imagination, while the other captures necessity. Together, they form a financial blueprint impossible to ignore. Americans base their investment choices on both emotion and logic. AI satisfies the desire for speed, excitement, and future potential. Energy satisfies the need for safety, continuity, and historical reliability. This emotional duality defines the modern American investor more than any chart or analysis. Most investors today are living through one of the rare moments where two sectors grow exponentially for different reasons. AI grows because of breakthroughs in computing, algorithms, and automation. Energy grows because demand never slows, regardless of technological revolutions. Even renewable energy expansion depends heavily on AI-driven optimization and forecasting. Every innovation in clean energy is tied to smarter software and more adaptive machine learning. AI needs energy to run, and energy needs AI to evolve. This interdependence is transforming how Americans view long-term investment strategies. We are witnessing the rise of a new economic equation with two equal variables. Big institutions are already adjusting portfolios accordingly, increasing exposure to both sectors simultaneously. Retail investors are following the same pattern, shifting away from the old idea that one sector must dominate. Younger investors chase AI for growth and identity. Older investors lean toward energy for stability and legacy. The combination creates a balanced market narrative built on cross-generational psychology. As America moves closer to 2026, the idea of AI versus energy feels less like competition and more like alignment. Every new AI model increases demand for massive data centers consuming enormous electricity. Every new energy discovery becomes more efficient with the help of predictive algorithms. This cycle loops endlessly, feeding growth in both directions. Investors who understand this relationship position themselves ahead of the curve. Those who ignore it risk falling behind in the decade's most important financial movement. The story of AI versus energy is not about which one wins, but about how they rise together. The U.S. economy thrives on innovation, resilience, and the ability to combine opposites strategically. AI represents agility, imagination, and uncharted potential. Energy represents grounding, consistency, and proven value. When these forces merge, they create the foundation of future wealth creation. Every American watching this shift senses that something bigger is happening. People see it in the news, in workplace changes, and in rising electricity bills linked to AI infrastructure. They feel it in the markets as both sectors surge for different reasons. The tension between these two worlds fuels curiosity and investment momentum. This first chapter explores the origins of that tension and how it shapes decision-making today. The next chapters dive deeper into why Americans are betting simultaneously on innovation and stability. The transition from digital dependence to intelligence dependence marks a historic turning point. Investors realize the economy is no longer just powered by resources, but by reasoning systems. But reasoning systems cannot exist without electricity, fuel, and infrastructure backing them. This forms a cycle that transforms competition into partnership. The American financial identity thrives on duality: fast growth paired with dependable strength. AI promises exponential scaling, energy promises foundational support. Together, they construct the framework of 2026's most strategic portfolios. This is why the story begins with both sectors side by side. This is why Americans are preparing for a future powered by intelligence and fueled by energy. This is why investors are rewriting the rules of wealth. This is the beginning of the greatest financial pairing of the decade. This is the start of the AI and energy era. AI's rise in America is more than a technological shift. It is a cultural transformation woven into everyday life. People wake up to AI-generated alarms, read AI-curated news, and drive cars optimized by machine learning systems. Every click, every search, every recommendation strengthens the belief that AI understands Americans better than humans do. Silicon Valley frames AI not as a tool, but as a new frontier of intelligence that expands human possibility. Americans respond to this narrative because it blends innovation with national pride. The idea that the United States leads the world in artificial intelligence fuels a sense of identity and global dominance. This pride becomes a driver of investment behavior across all age groups. Young investors see AI as the fastest path to wealth, comparing it to the internet boom of the early 2000s. Older investors see AI as the next industrial revolution, echoing familiar cycles of technological disruption. Every household interacts with AI daily, even if they don't realize it. Streaming platforms use AI to predict what people want to watch. Banks use AI to detect fraud and approve loans. Hospitals use AI to read scans and predict patient outcomes. The integration is so deep that removing AI would feel like shutting off electricity. This dependence fuels the belief that AI growth is inevitable and continuous. Investors see that inevitability and equate it with long-term value. Stock charts of AI companies show upward momentum that shapes consumer confidence. News headlines amplify the hype, reinforcing the narrative of unstoppable progress. Every breakthrough in AI creates new demand for hardware, software, and cloud infrastructure. NVIDIA's chips become symbols of the future, turning semiconductors into cultural icons. Microsoft's AI integrations make the technology feel accessible and universal. Google's models redefine search, ads, and the flow of information across the U.S. economy. Each milestone pushes American investors deeper into the AI ecosystem. People feel they are participating in a once-in-a-generation movement. The FOMO surrounding AI becomes a psychological force stronger than rational analysis. Even conservative investors allocate a portion of their portfolio to AI because they fear being left behind. The allure of exponential returns overshadows concerns about volatility. AI stocks behave like rockets, and Americans love rockets. The U.S. mindset celebrates rapid progress and technological leaps. AI taps directly into this cultural mentality. Tech influencers, CEOs, and analysts hype the narrative daily. Investors see AI as both glamorous and transformative. They imagine a future where machines understand emotions, predict markets, and replace entire industries. This imagination shapes stock demand more than financial reports do. In America, perception often drives valuation before fundamentals catch up. That perception is amplified by every viral AI demo released to the public. When people see robots performing human tasks, they see dollar signs. When they hear about AI beating doctors in diagnostics, they imagine trillion-dollar markets. When they listen to CEOs speak about Aggie, they imagine the next global empire. This emotional response becomes a self-sustaining loop. More excitement leads to more investment. More investment leads to more innovation. More innovation leads to more excitement. The loop propels AI stocks upward faster than traditional models can explain. Institutions reinforce the cycle by pouring billions into AI research. Government agencies highlight AI as critical to national security. This gives AI an aura of strategic importance beyond mere profit. Americans love industries tied to national strength, and AI fits perfectly into that narrative. The excitement reaches classrooms, workplaces, and public conversations. Children talk about AI careers the way previous generations talked about astronauts. College students pursue machine learning degrees at record rates. Employees retrain themselves to avoid being replaced by automation. Businesses adopt AI tools because they fear falling behind competitors. Entrepreneurs chase AI startups, believing they could build the next unicorn. The cultural shift creates an economic chain reaction across every sector. Advertising transforms into predictive personalization. Medicine transforms into algorithmic diagnosis. Transportation transforms into autonomous mobility. Retail transforms into AI-powered logistics. Finance transforms into algorithm-driven trading. Each transformation reinforces the idea that AI is not a trend but destiny. Investors follow destiny more passionately than data. Americans view AI as a symbol of progress, innovation, and future prosperity. This symbolism shapes portfolio decisions as strongly as earnings reports do. People believe AI companies will dominate global markets because the technology itself feels limitless. Limitlessness is an idea deeply embedded in American culture. The promise of infinite growth echoes through Hollywood, Silicon Valley, and Wall Street alike. AI becomes the manifestation of that promise. Every investor imagines they are early to a revolution that will reshape human life. The thought of missing out feels unacceptable. This emotional urgency pushes capital into AI faster than any sector in recent history. The media amplifies the narrative with sensational headlines about breakthroughs. Analysts predict trillion-dollar valuations, fueling expectations further. Politicians speak about AI as the cornerstone of future leadership. Together, these voices create an atmosphere where AI feels essential, inevitable, and unstoppable. Investors embrace that assumption and build portfolios around it. AI becomes more than a sector, it becomes a belief system. That belief system drives the American obsession with AI as 2026 approaches. It is this obsession that transforms AI from technology into an economic force guiding investment behavior across the nation. Energy's story in America begins long before AI, long before Silicon Valley, and long before modern markets took shape. Generations of Americans grew up watching oil rigs turn. Pipelines stretch across states, and refineries glow like cities in the night. Energy became woven into the national identity, a symbol of power, independence, and economic dominance. While tech comes and goes in waves, energy has always remained a constant foundation beneath every innovation. Americans trust energy because it has never disappeared during a recession, a war, or a financial crisis. Even when markets crash, people still need heat, power, fuel, and electricity just to survive. This stability gives energy stocks a level of reliability that no hype-driven sector can match. Investors see these companies as anchors in an unpredictable economy. The oil and gas giants have survived legislative changes, geopolitical tensions, and global price shocks. Their durability creates confidence that few industries can replicate. Americans understand that without energy, every modern convenience collapses instantly. Homes go dark, cities freeze, and businesses shut down when the energy supply stumbles. This awareness reinforces the belief that energy stocks are not just investments, but necessities. Every electric car, server room, military base, and manufacturing plant depends on energy to function. Even renewable technology requires mining, machinery, and grid infrastructure supported by energy companies. Energy forms the skeleton that supports every innovation in the modern world. Investors recognize this relationship intuitively because they see it in their everyday lives. Gas stations fill highways across every state, reminding citizens of energy's constant presence. Utility bills show up every month, reflecting a system that never rests. News about oil prices affects travel, food costs, and transportation across the entire country. Energy is more visible, more tangible, and more immediate than digital technology. People trust what they can see, touch, and rely on, and energy fits that psychological comfort zone. While AI feels futuristic and uncertain, energy feels familiar and dependable. This contrast creates a powerful investment balance in American portfolios. Energy companies offer dividends that pay out consistently year after year. These dividends become a major attraction for older investors seeking stable income. Retirees rely on these payouts to manage long-term financial planning. Younger investors appreciate energy stocks for their predictable performance during market turbulence. When tech dips, energy often rises, creating a natural hedge against volatility. This counterbalance becomes essential in portfolios that prioritize risk control. Americans also know that energy demand keeps rising, even when the economy slows. Population growth, urban development, and industrial expansion all push consumption upward. Data centers powering AI require massive amounts of electricity, which increases energy demand further. Every advancement in machine learning increases the strain on the grid. This dependency makes energy the silent backbone of the AI revolution. Investors realize that AI companies cannot operate without stable, abundant, and affordable power. This realization strengthens the belief that energy stocks will remain strong for decades. The oil and gas sector continues adapting, becoming more efficient and technologically advanced. AI itself helps optimize drilling, reduce waste, and improve resource forecasting. The integration of software into oil extraction makes energy companies smarter and more profitable. Renewable energy firms also benefit from machine learning predictions about weather, demand, and grid behavior. Wind and solar farms rely heavily on analytics to optimize performance in changing climates. This fusion of technology and energy creates a hybrid ecosystem where both sectors grow together. Investors watching this evolution see stability merging with innovation. The combination feels like a blueprint for long-term growth rather than a temporary trend. Americans appreciate industries that evolve without losing their core purpose. Energy companies continue supplying power even as they upgrade their processes with AI systems. This adaptability increases investor confidence, proving that energy is not outdated but evolving. Oil giants diversify into natural gas, renewables, and carbon capture, reinforcing long-term relevance. Utility companies invest in grid modernization and smart meters to support digital demand. Pipeline companies expand infrastructure to support rising consumption nationwide. Every expansion signals future profitability and reliability. Americans value sectors that offer both financial security and long-term strategic importance. Energy fits both categories seamlessly. Millions of jobs depend on the energy industry, creating strong political and economic support. This support reduces the likelihood of rapid regulatory changes that could disrupt profitability. Investors see this political stability as another layer of security. Energy stocks behave like long-distance runners that outlast short-term market noise. They perform steadily through elections, policy shifts, and global uncertainty. This resilience makes them ideal for balancing high-risk tech investments in a diversified portfolio. Americans often view energy as the safe side of modern investing. When they take risks on AI, they lean on energy to protect their downside. This complementary relationship mirrors how the U.S. economy itself functions. Innovation pushes forward, but energy keeps everything grounded. The country thrives when both forces move in tandem rather than in competition. As Americans look ahead to 2026, they understand that energy's role is far from diminishing. Even in a future filled with automation, robotics, and digital intelligence, energy remains the heartbeat of the nation. People trust the heartbeat because it never stops, never sleeps, and never disappears during crisis. This trust becomes the foundation of energy's enduring value. The story of American investing cannot be told without acknowledging energy's unmatched stability and strength. It is this strength that makes energy stocks a central pillar in portfolios preparing for the future. Americans recognize that no matter how advanced AI becomes, the world still needs power. And that simple, unchanging truth is why energy stocks continue to rise, remain relevant, and earn investor loyalty year after year. The rise of AI in America is impossible to tell without focusing on the three giants shaping the nation's technological destiny. These companies do not simply participate in the AI revolution. They define it, design it, and accelerate it at a pace the world struggles to catch. The first is a name that has transformed from a gaming brand into the unmatched ruler of advanced computing power. NVIDIA stands at the center of the AI universe, holding the keys to the chips that train the world's most powerful intelligence models. Every breakthrough in machine learning depends on the GPUs NVIDIA creates with unmatched precision. Americans view the company as the heartbeat of artificial intelligence, powering servers, cloud networks, and robotic systems across the country. Its success symbolizes America's dominance in high-performance computing. Investors see NVIDIA as more than a hardware supplier. They see it as the engine driving the entire AI ecosystem forward. Every new model, from chatbots to autonomous cars, depends on its chips to function. This dependency gives NVIDIA influence that feels almost irreplaceable in the industry. People believe that as long as AI grows, NVIDIA will grow alongside it. This belief has turned the company into one of the most iconic and admired stocks in modern history. Its rise inspires confidence and ignites investor excitement in ways few companies ever achieve. The second king of AI is Microsoft, a corporation with decades of innovation behind it and a future aimed squarely at intelligence-driven computing. Microsoft's integration of AI into everyday tools makes the technology accessible to millions. From cloud services to office applications, AI becomes part of daily workflows across schools, businesses, and government institutions. Americans view Microsoft as the bridge between complex innovation and practical use. Its partnership with leading AI research groups solidifies its role as a core builder of the intelligence revolution. The company's massive cloud infrastructure supports AI training at a scale unmatched by most competitors. This infrastructure gives Microsoft an advantage that extends far beyond software. Investors trust Microsoft because it has consistently reinvented itself without losing stability. Its ability to adapt across multiple eras, from PCs to cloud computing to AI, shows resilience rarely found in major corporations. This resilience makes Americans see Microsoft as a safe yet powerful bet for the future. They believe the company will not only participate in AI but shape how AI is used throughout daily life. The third giant in the AI hierarchy is Google's parent company, Alphabet. Alphabet carries the legacy of organizing the world's information and continues that mission through machine intelligence. Its search engine reflects the largest data ecosystem on Earth, providing training fuel for advanced AI systems. Every query, every click, and every interaction feeds the models that power Google's AI breakthroughs. Alphabet's research divisions explore cutting-edge innovations that often become global standards. Americans associate Google with the idea of infinite knowledge and technological exploration. This perception makes Alphabet a natural leader in AI development. Its algorithms influence consumer behavior, advertising, navigation, and communication across the nation. People trust Google's intelligence systems because they already use them all day without noticing. That hidden integration gives Google a unique advantage over competitors. It holds data, talent, and infrastructure on a level few companies in the world can match. Investors recognize this dominance and treat Alphabet as an essential AI stock for the long term. Together, these three companies form a technological triangle that shapes the course of artificial intelligence in America. NVIDIA builds the tools. Microsoft delivers the platforms. Alphabet advances the research and data. Each giant plays a role that complements the others in perfect alignment. This alignment accelerates the entire AI ecosystem with unstoppable momentum. Americans trust these companies because they combine innovation with consistency. They have histories of expansion, leadership, and global influence. People believe that the future of AI will be built on the foundations these giants created. Their strategies guide smaller companies and startups across the nation. Their breakthroughs ripple across markets, industries, and global economies. Investors understand that these companies do not rely on trends, they create them. The influence they hold determines how fast AI evolves and how deeply it integrates into society. Every new advancement from these giants sends shockwaves across the stock market. Each announcement becomes a headline that shapes investor behavior. Every product launch fuels speculation, excitement, and demand for more AI-driven innovation. Americans often treat news from these companies as indicators of the future economy. They view their progress as a roadmap for long-term investment decisions. The dominance these giants hold also reflects America's global leadership in artificial intelligence. The rest of the world looks to the United States to set the standard for AI development. This global influence enhances investor confidence even further. People believe that as long as America leads in AI, these companies will stand at the front line of progress. Their combined power gives them control over critical infrastructure essential to the future of digital intelligence. Millions of American households rely on their products daily. Businesses integrate their tools into workflows, forming an ecosystem impossible to detach from the modern economy. Governments adopt their technologies to strengthen national security and public service efficiency. This widespread integration makes these companies nearly irreplaceable. Their presence becomes as essential as electricity, the internet, and transportation systems. Investors feel secure knowing that these companies are not only shaping the future, but maintaining the present. The three AI kings symbolize reliability, innovation, and unstoppable growth. Their leadership fuels confidence that artificial intelligence will continue transforming every part of American life. This belief strengthens their role as the core of AI investing. Americans view them not as optional holdings but as foundational pillars for any future-focused portfolio. Their impact extends beyond profits, influencing culture, education, research, and global competition. This influence is why the AI revolution feels inevitable and powerful. And it is why these three companies stand at the center of America's vision for 2026 and beyond. Every technological revolution in history has always depended on something hidden beneath the surface. Artificial intelligence may look digital, futuristic, and weightless, but deep inside, it runs on a brutally physical reality. AI needs electricity the way humans need oxygen. Every model, every GPU, every training cycle, every query, all of it is powered by energy. And today, the energy demand of AI is rising faster than anything the modern grid has ever seen. Behind every glowing data center lies a giant electric heartbeat that never stops. This energy demand is so massive that American utilities have been forced to rewrite their 10-year plans in barely 24 months. The AI revolution is no longer just a software story. It is an energy story. And that's exactly why American investors in 2026 are shifting their eyes toward energy infrastructure companies like never before. Because these companies aren't just supporting AI, they are enabling it. They are accelerating it. They are powering the next wave of digital intelligence. Silicon Valley is building bigger data centers. GPU companies are pushing hardware limits. Cloud giants are racing for dominance. But none of them can do anything without a stable, scalable, non-stop flow of electricity. AI cannot exist in the dark. This is the hidden truth most people never realize. And this single truth is completely reshaping how investors evaluate both AI and energy stocks. Across the United States, data center construction is exploding. Entire states are being reshaped because of the AI boom. Virginia, Ohio, Texas, Arizona, and Georgia are becoming the new battlegrounds of digital infrastructure. These regions have land, they have grid potential, they have regulatory support. And most importantly, they have the flexibility to expand power systems quickly. Tech CEOs who once talked only about cloud servers are now negotiating for land next to substations. They're buying entire power plants. They're signing massive energy contracts that last 20, 30, even 40 years. They know that the biggest threat to AI is not hardware shortages, it's not talent, it's not competition, it's electricity. This is why utilities and energy infrastructure companies are becoming some of the most strategically important corporations in America. For decades, investors treated them as slow, safe, dividend-based plays. But the AI boom has changed their identity. Now they are seen as core enablers of the digital economy. Every AI model depends on them. Every GPU cluster depends on them. Every cloud platform depends on them. Without energy, the entire AI industry collapses. And that dependency is creating one of the strongest investment narratives heading into 2026. The next question is, which types of energy are going to dominate the AI boom? Natural gas is one of the biggest players right now. It's abundant. It's flexible. It can spin up quickly when data centers suddenly demand more power. Renewables are rising fast too. Solar and wind are expanding at historic speed. But they face a problem. They're intermittent. Data centers don't accept intermittent. They need power every second of every day. And that's where grid-scale batteries enter the picture. These massive storage systems capture energy when supply is high and release it when AI demand spikes. Battery companies are turning into quiet giants as AI scaling continues. And then there's nuclear energy. It is stable. It is carbon-free. It provides massive continuous power. And suddenly, it is being re-evaluated by tech companies as a long-term high-confidence solution. Small modular reactors, once considered futuristic, are now being studied and negotiated by data center developers. The deeper we go, the clearer the picture becomes. AI is not just consuming energy, AI is reshaping the energy ecosystem. AI models are helping energy companies improve drilling efficiency. They're forecasting grid loads with new accuracy. They're reducing waste across pipelines. They're optimizing wind turbine angles, solar output, and battery discharge cycles. AI makes the energy system smarter. And the energy system allows AI to exist. It is a perfect loop. A self-reinforcing cycle. And in 2026, investors are expected to target companies that sit exactly at this intersection. Companies that blend physical infrastructure with digital intelligence. Companies that think in decades, not quarterly earnings. Companies that understand that electricity is now the currency of AI. This is why energy infrastructure is becoming one of the most attractive, stable, and high-demand sectors for American investors. It's not a trend. It's not hype. It's reality. AI is electricity hungry. And the companies that feed that hunger will grow, expand, and dominate the next chapter of the American economy. This is the silent engine of the AI era. And in the next part, we go even deeper into the companies, technologies, and forces shaping this new AI energy world. Every great industry has a supply chain that the public rarely sees. Artificial intelligence may appear digital and weightless, but it depends on a massive physical network to exist. This network spans mining, manufacturing, transmission, construction, logistics, and energy engineering. Most investors focus only on tech giants and forget the hidden industries that make AI possible. They watch Nvidia, Microsoft, and Tesla without considering where wiring, cooling systems, and power come from. They overlook who builds transformers, substations, or transmission lines. They ignore the companies producing rare minerals for batteries and GPUs. They forget the pipelines, power plants, and grid infrastructure that support AI. In 2026, American investors are expected to turn attention to these invisible giants. These companies do more than support AI. They enable it at the deepest level. Without them, the AI energy ecosystem would collapse instantly. Imagine a GPU cluster with no cooling system. Imagine a data center with no transformers. Imagine a cloud network with no fiber infrastructure. Imagine solar farms without batteries. Imagine natural gas without pipelines. All of this exists because of a silent, industrial supply chain. Smart investors are already paying attention to this chain. It is the foundation of the AI energy revolution. Transmission and grid construction companies build the literal highways of electricity. They expand the grid when AI data centers demand more power. They install steel towers across states and lay underground power lines in cities. They upgrade substations and transformers to stabilize voltage. Without them, AI cannot expand. Grid demand is rising faster than at any point in history. Construction companies specializing in high-voltage infrastructure have multi-year backlogs. Their order books signal long-term growth for investors. Materials like copper are essential to AI and energy alike. Every GPU rack, cooling system, and transformer uses copper. Solar farms, wind farms, and EV chargers all depend on it. Copper becomes the bloodstream of the AI energy future. Steel is equally critical. Data centers, pipelines, nuclear reactors, wind turbines, and transmission towers all require massive amounts of it. Steel manufacturers supplying infrastructure gain new relevance in 2026. Advanced cooling technologies are now essential for AI data centers. High-density GPU racks generate enormous heat that must be managed precisely. Liquid cooling, immersion cooling, and airflow innovations are becoming vital. Companies that innovate in cooling are increasingly profitable. Natural gas infrastructure powers many AI facilities due to its flexibility and speed. Pipeline operators transport fuel that keeps AI alive during peak demand. These companies earn stable, long-term income from contracts and assets. Battery storage is becoming equally critical for renewable energy and AI integration. Lithium, nickel, cobalt, and manganese are in rising demand for large-scale batteries. Battery supply chains, from raw materials to gigafactories, are major investment targets. AI workloads are doubling every year, making storage innovation crucial. Logistics is another overlooked component. Transformers, turbines, steel beams, and pipelines must be moved across vast distances. Companies specializing in heavy logistics form a backbone for AI expansion. Slowly, these industries form one interconnected system, the AI energy supply chain. No single tech company can scale without it. Investors are beginning to understand this ecosystem. The next big winners may not be flashy tech names, but silent builders and enablers. Manufacturers, transporters, resource suppliers, and grid expanders are all part of the network. Cooling innovators and battery developers are critical players too. This ecosystem powers the AI revolution quietly and efficiently. In 2026, the smartest investors will diversify across these sectors. They will invest not only in AI but in everything AI depends on physically. This approach balances risk and secures long-term growth. The supply chain's importance grows as AI scales faster than ever. Electricity is now the currency of progress, and those who control it gain strategic advantage. Companies combining physical infrastructure with digital intelligence are becoming irreplaceable. Utility firms with strong balance sheets and regulatory relationships are quietly rising in value. Midstream energy companies benefit from long-term contracts and infrastructure scarcity. Renewable energy storage companies profit as AI drives predictable demand patterns. Pipeline operators and battery manufacturers become essential partners in the AI economy. Grid modernization firms are now high-growth strategic investments. The hidden supply chain transforms energy from a boring utility into a core AI enabler. Investors realize that AI cannot grow without reliable energy infrastructure. The convergence of digital intelligence and energy creates unprecedented investment opportunities. This is a new paradigm in American finance. AI and energy are symbiotic, one cannot thrive without the other. Physical infrastructure investment becomes as important as software innovation. Companies that understand and act on this connection are positioned to dominate. Even small industrial suppliers gain strategic relevance because AI depends on every component. Investors increasingly treat these hidden sectors as essential portfolio holdings. The narrative of invisible support networks is reshaping market perception. Long-term wealth will flow to those who recognize and invest in this synergy. The AI energy supply chain is no longer optional for forward-looking investors. It is a foundation of the next decade's most profitable investments. From mining to logistics, manufacturing to grid expansion, the chain is vast and interconnected. Each sector's success reinforces the others, creating a self-sustaining ecosystem. Data centers depend on pipelines. Pipelines depend on manufacturing, and manufacturing depends on logistics. Investors who understand this web position themselves ahead of the curve. This is the hidden engine of the AI era. It quietly powers the digital world while creating long-term value in physical industries. And it is the reason Americans are expected to hold both AI and energy assets in 2026. The story of AI is incomplete without energy. The story of energy is incomplete without AI. Together, they form a powerful investment narrative. This duality defines portfolios, market strategies, and financial thinking for the coming decade. Investors no longer see energy as boring or slow. They see it as essential, strategic, and unstoppable. AI is electricity hungry, and energy companies feed that demand. The next wave of wealth in America will be created by understanding this dependency. Hidden industries are becoming as critical as visible tech giants. Investing in the supply chain ensures participation in the growth of AI indirectly but effectively. Infrastructure, logistics, materials, cooling, pipelines, batteries, and grids are all integral. These sectors will quietly dominate portfolio returns for the next decade. Physical infrastructure has become digital intelligence's lifeblood. This recognition is transforming investment priorities. American investors in 2026 are expected to embrace this holistic approach. They will hold AI, energy, and the industries that link the two together. And those who fail to understand this will miss one of the most important investment stories of the century. The AI energy supply chain is the silent giant behind every innovation, every breakthrough, and every billion-dollar model. Understanding it is no longer optional. It is the path to consistent, long-term wealth in a digital world. The AI revolution in America is exciting, but it cannot exist without a massive supporting ecosystem. That ecosystem extends far beyond Silicon Valley and the headlines about tech giants. It reaches deep into energy, infrastructure, logistics, and materials. The companies operating quietly behind the scenes are becoming essential players in the AI economy. Every data center depends on electricity, pipelines, cooling systems, and batteries. Without these, even the most powerful AI models cannot function. Investors are starting to understand that the hidden layers of the supply chain are as important as the visible ones. The convergence of AI and energy creates unprecedented growth opportunities. Utility companies are no longer just boring dividend payers. They are strategic enablers of digital intelligence. Transmission companies build the highways of electricity that feed data centers. They install towers, lay underground lines, and upgrade substations to ensure stable power. Every improvement in the grid allows AI to scale faster. Copper mining, steel production, and rare mineral supply chains are now essential for AI hardware. GPU clusters, cooling systems, and battery storage all depend on these materials. Companies that provide these resources are quietly gaining importance. Energy storage is critical to manage AI's unpredictable demand spikes. Battery manufacturers are scaling up rapidly to meet national and corporate requirements. Lithium, nickel, cobalt, and manganese supply chains are seeing historic growth. Without battery storage, renewable energy cannot reliably power AI systems. This makes energy and AI completely interdependent. Natural gas pipelines provide fast, reliable energy to data centers during peak usage. Pipeline operators earn long-term stable revenue from utility and corporate contracts. Renewables contribute clean energy, but they rely on storage and grid management to be effective. Nuclear energy is re-emerging as a long-term solution for continuous power. Small modular reactors allow faster deployment and safer operations. Investors increasingly view nuclear as an essential part of the AI energy equation. Cooling technology is another overlooked, yet vital component of an infrastructure. High-density servers generate enormous heat that must be managed carefully. Liquid cooling, immersion cooling, and airflow optimization are becoming standard. Companies innovating in cooling technology are gaining strategic significance. Even logistics plays a crucial role in the AI energy ecosystem. Heavy transformers, turbines, steel beams, and pipelines must be transported across vast distances. Transportation companies that specialize in these operations are becoming critical enablers of AI. Every sector supporting AI now has long-term growth potential. The supply chain forms a self-reinforcing system where each component strengthens the others. Data centers rely on pipelines, pipelines rely on manufacturing, and manufacturing relies on logistics. Investors who recognize this interconnected web position themselves ahead of the market. This network is the hidden engine driving AI growth across America. AI cannot expand without energy, infrastructure, and material support. Likewise, energy companies benefit from AI's increasing demand for electricity and storage. Renewables become more profitable when paired with AI optimization. Battery manufacturers gain revenue from the rapid adoption of data centers. Pipeline operators secure long-term contracts due to growing AI energy needs. Utilities modernize grids faster because AI demands precision and reliability. The synergy between AI and energy creates a durable investment narrative. Companies at this intersection are positioned to dominate the next decade. Investors are diversifying portfolios to include both visible tech and hidden infrastructure. This ensures participation in AI's growth, even indirectly. The market is recognizing that supply chain companies are not optional. They are critical for maintaining AI and energy expansion. This realization is transforming investment strategies in 2026. AI and energy are no longer separate sectors. They are intertwined, codependent, and mutually reinforcing. Investors now consider electricity supply as vital as computing power. Physical infrastructure has become digital intelligence's lifeblood. Companies providing materials, storage, cooling, and transmission are essential to AI. Even mid-sized industrial firms can become strategic investments due to their role in the chain. The AI energy supply chain will quietly deliver consistent growth. This network underpins technological innovation and national competitiveness. Those who ignore it risk missing one of the most important investment stories of the century. Investing in this ecosystem provides exposure to AI without relying solely on high-risk tech stocks. Energy, infrastructure, and supply chain firms offer stability and long-term growth. They provide the foundation that allows AI to operate at scale. AI and energy together form the ultimate investment pairing for 2026. Investors who embrace this duality benefit from growth, stability, and strategic positioning. Hidden sectors like utilities, pipelines, batteries, cooling, and logistics are gaining recognition. They are the unsung heroes of the AI revolution. AI growth depends on them, and they thrive because of AI demand. This cycle ensures both sectors continue to grow in tandem. The story of AI cannot be told without energy. And the story of energy cannot be told without AI. Together, they define the future of American investment. Those who understand this synergy will outperform those who chase hype alone. Portfolios that integrate both AI and its supporting ecosystem are more resilient. The AI energy supply chain represents the backbone of the next decade's innovation. From mining and manufacturing to transmission, storage, and logistics, every link matters. Investors who recognize this will secure long-term returns. The AI revolution is powered by electricity, materials, and infrastructure. And those who control the flow of these resources control the pace of AI growth. Silent, physical industries now share the spotlight with high-profile tech companies. Infrastructure and supply chain investments are becoming central to portfolio strategy. Investors can no longer ignore the critical relationship between AI and energy. The convergence of these sectors defines economic growth in 2026 and beyond. Those who understand this interconnected ecosystem gain strategic advantage. Energy and AI are no longer separate paths, they are intertwined highways to wealth. Investing in the AI energy ecosystem provides stability, growth, and a competitive edge. The hidden giants behind AI are building the future quietly but relentlessly. Every data center, pipeline, battery, and transformer is part of this story. The investors who recognize their importance will hold a unique advantage. And in 2026, this insight will separate successful portfolios from ordinary ones. AI and energy together are the ultimate dual engine driving America's next era of wealth. As AI continues to grow, investors are realizing that technology alone does not drive wealth. Every AI breakthrough depends on an intricate network of supporting industries. Energy, infrastructure, materials, and logistics form the foundation beneath digital innovation. Without reliable power, even the most advanced AI models cannot function. Data centers demand continuous electricity, precise cooling, and robust backup systems. Natural gas pipelines, renewable grids, and nuclear facilities supply that power. Battery storage ensures energy stability during peak AI usage. Companies managing these systems are becoming critical investment targets. Investors in 2026 are increasingly focusing on the hidden enablers of AI. Supply chain companies, once overlooked, are now essential. Copper and steel producers support hardware manufacturing and grid infrastructure. Battery manufacturers supply storage for renewables and AI facilities. Pipeline operators transport natural gas to power data centers. Cooling technology companies maintain optimal temperatures for high-density GPU clusters. Heavy logistics firms move transformers, turbines, and essential materials. Each component is interconnected in a complex AI energy ecosystem. Without any link, the system risks failure. This dependency creates long-term growth opportunities across multiple sectors. Investors are now viewing AI and energy as complementary forces. Tech giants like NVIDIA, Microsoft, and Alphabet rely on these infrastructure companies. Data centers cannot expand without reliable electricity and physical support. Energy infrastructure companies benefit directly from AI's rapid growth. Renewable energy developers gain new revenue through AI-optimized grids. Battery storage providers profit as AI facilities demand more capacity. Pipeline companies secure long-term contracts due to rising AI power consumption. Utilities modernize grids to support AI demand, increasing their strategic importance. The AI energy supply chain is now a vital investment narrative. Investors are diversifying portfolios to include both visible and hidden sectors. Physical infrastructure has become the lifeblood of AI innovation. Every advancement in AI drives growth in supporting industries. Conversely, reliable infrastructure accelerates AI development. This symbiotic relationship strengthens long-term investment potential. Even mid-sized industrial suppliers gain strategic relevance. Cooling technology firms, battery manufacturers, and logistics companies are quietly becoming essential. Their success is intertwined with AI expansion. Investors recognize that ignoring these sectors risks missing substantial returns. Supply chain visibility is becoming a critical factor in investment decisions. The hidden giants are as important as headline tech companies. This ecosystem underpins national competitiveness in AI. AI growth cannot happen without energy, infrastructure, and material support. Renewable energy integration is enhanced through AI optimization. Battery manufacturers benefit from predictable energy demands of AI facilities. Pipeline operators enjoy stable revenue streams from essential services. Grid modernization becomes a high-growth opportunity as AI scales. The combination of energy and AI creates durable investment opportunities. Companies at this intersection are positioned to dominate the next decade. Portfolio strategies now emphasize both visible tech and supporting infrastructure. Investors secure participation in AI growth indirectly through supply chain investments. Electricity supply is now as important as computing power. Infrastructure companies are no longer peripheral, they are central to AI expansion. The AI energy ecosystem forms a self-reinforcing growth loop. Physical industries now share the spotlight with digital innovation. Investment strategies increasingly account for interdependency between sectors. Companies providing materials, storage, cooling, and transmission are essential to AI operations. Even smaller industrial firms can have strategic investment significance. The supply chain quietly delivers consistent, long-term growth. AI depends on it for uninterrupted operations. Energy companies benefit from rising demand fueled by AI expansion. Renewables and storage systems gain efficiency through AI-driven optimization. Pipeline operators secure contracts for reliable energy transport. Utilities modernize grids to meet AI requirements. Cooling innovations maintain high-performance computing environments. Heavy logistics firms ensure smooth delivery of essential equipment. The synergy between AI and energy creates sustainable, long-term investment potential. Companies that understand and act on this interconnection are well-positioned. Portfolios integrating AI and supporting infrastructure become more resilient. Hidden sectors are increasingly recognized as essential investment opportunities. The supply chain forms the backbone of AI growth. Data centers, pipelines, batteries, and transformers all play a critical role. Investors aware of this system gain strategic advantage. The AI energy supply chain enables technological and economic growth simultaneously. Investing in it ensures participation in AI's expansion without relying solely on tech stocks. Physical industries supporting AI are becoming central to market strategies. Energy and AI are intertwined, creating a dual-engine growth model. Long-term wealth will flow to those who understand this interdependency. The hidden giants are quietly building the future. Every transformer, turbine, pipeline, and battery is part of the AI story. Investors who recognize this gain a unique competitive edge. In 2026, understanding this ecosystem will differentiate successful portfolios. AI and energy together drive the next era of American innovation. The convergence of digital intelligence and physical infrastructure defines the future of investment. The future of AI in America is inseparable from the energy that powers it. Every data center, every GPU cluster, every server farm depends on reliable electricity. Energy infrastructure has become a strategic backbone of the digital economy. Investors are beginning to recognize the hidden potential of these industries. Tech companies cannot scale without pipelines, grids, and battery storage. Data centers cannot function without cooling technology and uninterrupted power. Every advancement in AI drives demand for electricity and materials. Energy companies benefit directly from AI's growth. Renewable energy developers gain efficiency through AI optimization. Battery manufacturers provide storage to balance intermittent energy sources. Pipeline operators secure long-term revenue from natural gas transport. Utilities modernize grids to meet AI's increasing demand. The AI energy ecosystem is symbiotic and self-reinforcing. Investors now see energy as more than a defensive sector. Energy has become a growth engine tied to AI expansion. The hidden supply chain is critical for technological progress. Infrastructure companies are no longer peripheral players. They form the foundation on which AI scales. Cooling systems maintain optimal temperatures in high-density data centers. Liquid and immersion cooling are becoming industry standards. Thermal management innovations drive efficiency and prevent failures. Every transformer, turbine, and transmission line is essential for AI operations. Copper, steel, and rare minerals power hardware and grid infrastructure. Battery storage relies on lithium, nickel, cobalt, and manganese. Supply chains for these materials are becoming strategic investment targets. Heavy logistics companies transport essential equipment across states. Every delivery enables AI to operate and expand. The AI energy network forms a complex, interconnected ecosystem. No single company can scale AI without this foundation. Investors are diversifying portfolios to include these critical sectors. Physical infrastructure supports digital innovation at scale. Companies at the intersection of AI and energy are positioned for long-term growth. Midstream energy firms benefit from essential pipelines and stable contracts. Renewable energy developers profit from AI-optimized grid usage. Battery manufacturers gain predictable revenue from AI energy demands. Grid modernization companies capture new growth from data center expansion. Cooling technology innovators maintain AI performance and reliability. Industrial manufacturers provide transformers, turbines, and structural components. Each sector reinforces the others in a self-sustaining system. Investors who recognize this web gain a strategic advantage. The supply chain quietly drives AI growth across America. Hidden infrastructure companies are becoming indispensable. Physical industries now share the spotlight with tech giants. AI growth depends on reliable energy, materials, and infrastructure. This interdependency creates long-term investment opportunities. Energy companies gain from rising AI electricity demand. Renewables and storage systems integrate more efficiently with AI optimization. Pipeline operators benefit from predictable energy transport needs. Utilities modernize grids to meet the high demands of AI data centers. Cooling technology firms prevent failures in high-density systems. Heavy logistics companies ensure timely delivery of essential materials. The synergy between AI and energy produces durable investment potential. Portfolios integrating AI and infrastructure are more resilient. Hidden sectors gain recognition as vital investment opportunities. The supply chain forms the backbone of AI and technological growth. Data centers, pipelines, batteries, and transformers are all critical. Investors aware of this system gain strategic insight. The AI energy supply chain enables simultaneous technological and economic growth. Investing in this ecosystem ensures exposure to AI without relying solely on tech stocks. Physical industries supporting AI are central to market strategy. Energy and AI now operate as a dual-engine growth model. Long-term wealth flows to those who understand this interdependency. The hidden giants quietly build the foundation of the future. Every transformer, turbine, battery, and pipeline contributes to AI's expansion. Investors who recognize their importance gain a competitive edge. In 2026, understanding this ecosystem will differentiate successful portfolios. AI and energy together drive the next era of American innovation. The convergence of digital intelligence and physical infrastructure defines investment opportunities. Portfolios that integrate both visible tech and supporting industries capture maximum growth. Energy infrastructure is no longer slow and defensive. It is strategic and high growth. Hidden sectors such as logistics, cooling, storage, and pipelines are now essential. Investment strategies increasingly account for the AI energy synergy. The AI revolution relies on energy at every stage of development. Supply chain companies are quietly becoming the most critical enablers of AI. Investing in these sectors provides stability and participation in digital growth. The interconnected AI energy network ensures sustained technological progress. Future innovations in AI will continue to drive demand for energy and infrastructure. Hidden industries now shape market dynamics and portfolio strategies. Investors recognize the long-term benefits of supporting these essential systems. AI cannot exist without energy, and energy thrives because of AI. Together, they form the dual pillars of growth for 2026 and beyond. AI's rapid expansion has pushed America into a new era where digital power meets physical strength. Investors are seeing that artificial intelligence alone cannot operate without a vast energy backbone. Every breakthrough in machine learning requires massive electricity. Every upgrade in GPU technology increases demand on the grid. Data centers have become the factories of the digital age. They consume more power than entire towns in some regions. This shift is forcing investors to reconsider old assumptions about the market. Tech is no longer isolated from traditional industries. Energy companies have become essential partners in the AI revolution. Electricity demand is rising at a pace not seen in decades. Utilities are modernizing infrastructure to handle persistent AI workloads. Transmission companies are upgrading lines to support new data hubs. Power plant operators are scaling generation capacity to meet future needs. Natural gas providers benefit from stable, long-term contracts. Renewable developers enjoy constant demand from green-focused data centers. Solar and wind farms are expanding near major tech hubs. Battery storage facilities are growing in both size and sophistication. AI companies rely on these systems to stabilize intermittent energy. Energy reliability has become a competitive advantage for tech giants. Companies with access to strong grids scale faster and more efficiently. Regions lacking infrastructure fall behind in tech development. This creates a new map of economic growth across America. Investors watch these shifts closely to predict long-term winners. States investing in energy infrastructure are becoming AI superstates. Texas, Virginia, and Arizona are emerging as data center powerhouses. Local grids are being redesigned to support continuous AI compute loads. Cooling technology is advancing rapidly as facilities become denser. Water-cooled systems reduce operational stress on servers. Immersion cooling pushes efficiency to new levels. Mechanical engineering firms benefit from this cooling revolution. Industrial suppliers are scaling to meet demand for high-capacity equipment. Manufacturers of transformers and turbines see rising shipments. Mining companies supplying copper and lithium gain strategic relevance. AI has created a surge in demand for raw materials. The supply chain has become a national priority. Governments focus on securing minerals essential for batteries and chips. Policy changes drive investment in domestic production. Companies that once operated quietly now sit at the center of attention. Investors recognize their role in powering America's technological dominance. AI hardware depends entirely on these physical components. Every cable, transistor, and microchip requires raw materials. Every server rack depends on stable power infrastructure. The system is vast, interconnected, and increasingly complex. This complexity creates opportunities for patient, long-term investors. Energy infrastructure firms enjoy predictable, recurring revenue streams. AI data centers require consistent, high-capacity electricity year-round. This makes the energy sector more stable than ever before. At the same time, AI introduces new layers of explosive growth potential. The combination creates a unique investment environment. Portfolio managers are blending tech with energy for maximum exposure. The strategy delivers both stability and innovation. It balances volatility while maintaining high upside potential. Even traditional investors are shifting toward this hybrid model. Financial institutions are increasing positions in grid modernization companies. Private equity firms invest heavily in cooling and storage technologies. Venture capital explores startups building infrastructure for AI. This expands opportunity across every level of the market. Small-cap industrial suppliers become hidden winners. Midstream pipeline operators benefit from predictable energy throughput. Utility providers gain new income from tech sector electricity contracts. Renewable developers secure partnerships with major AI companies. The entire ecosystem rises together as AI demand accelerates. This momentum is expected to continue through 2026 and beyond. AI adoption is still in its early stages. Energy modernization is only beginning to scale. The two sectors feed each other in a continuous loop. Every improvement in AI requires more power. Every improvement in energy creates room for more AI. This reinforces both industries simultaneously. Investors who understand this loop gain a strategic edge. They position themselves ahead of long-term structural growth. The future belongs to companies at the intersection of digital and physical power. America's economic landscape is being reshaped by this convergence. Tech hubs are transforming into energy-dependent superstructures. Energy companies are evolving into tech-critical infrastructure providers. The line between sectors is disappearing with each passing year. This creates unprecedented opportunities for informed investors. The companies powering this ecosystem are becoming the giants of tomorrow. AI may be the brain of the future economy, but energy remains its beating heart. Together, they form a dual-engine system driving America forward. Investing in this synergy positions portfolios for the next decade of growth. The convergence of electrons and algorithms defines the economic story of 2026. Those who understand this transformation will lead the future of wealth creation. AI's momentum in America has triggered a shift that is bigger than any single industry. Investors are starting to realize that the next wealth wave is built across multiple interconnected layers. Front-end technology gets the attention, but back-end infrastructure captures long-term value. This understanding is reshaping how smart money allocates capital. AI companies cannot scale without reliable, abundant electricity. Energy providers cannot grow without AI-driven demand surges. The two sectors fuel each other in a constant feedback loop. This loop strengthens as more businesses adopt AI tools. Every company wants automation, insight, and efficiency. That desire drives massive demand for cloud computing. Cloud companies expand data centers to provide that computing power. Data centers increase electricity consumption at unprecedented levels. Utilities must modernize grids to support this new digital burden. Grid operators invest heavily in transmission upgrades. Power plant developers respond by adding new generation capacity. Renewable companies scale projects to supply green energy to AI customers. Battery firms build new storage sites to stabilize renewable supply. Pipeline operators secure multi-year agreements to deliver natural gas. The entire infrastructure expands because AI continues to grow. This creates a synchronized investment opportunity across American markets. Investors who diversify into this chain position themselves for dual growth. They capture upside from both technology adoption and infrastructure expansion. This approach provides balanced exposure to disruptive innovation. At the same time, it offers stability through physical asset-backed companies. The blend is unlike any previous investment cycle in modern history. AI is reshaping both digital and physical landscapes simultaneously. Companies that adapt quickly gain an enormous competitive edge. Sectors once considered slow are now accelerating rapidly. Energy, utilities, materials, and logistics are becoming high-growth categories. Their relevance increases every time AI usage expands. The relationship between these industries and AI is becoming inseparable. Investors who understand this alignment act early to capture growth. Portfolio flows show rising interest in energy-linked tech strategies. Financial institutions are rebalancing toward infrastructure-heavy assets. Hedge funds target companies involved in grid modernization. Pension funds increase exposure to utilities with AI-driven demand growth. Retail investors follow these trends after seeing consistent returns. The pattern is clear. AI is powering America's next infrastructure boom. This boom extends beyond data centers and technology campuses. It impacts shipping routes, material supply chains, and transport hubs. Trucks, trains, and ships carry the physical components of AI facilities. Manufacturing plants produce hardware for servers and cooling systems. Mining companies extract minerals for batteries and wiring. Construction companies build the structures that house AI clusters. Every layer supports the layer above it. This pyramid of industries strengthens as AI capabilities advance. Each upgrade in the AI models requires more hardware. More hardware requires more energy. More energy requires more infrastructure. More infrastructure requires more materials. This chain reaction continues year after year. The compounding effect generates long-term economic momentum. Long-term investors recognize the compounding nature of these forces. They position their capital to benefit from every link in the chain. This strategy reduces risk while enhancing growth potential. The diversification across interconnected industries produces resilience. Even if one sector pauses, others continue upward. AI's demand curve ensures continuous forward pressure on the ecosystem. The American economy is restructuring around this digital-physical blend. The country's competitive advantage grows with every new AI deployment. States investing in energy and tech infrastructure attract major companies. Job creation rises around data center construction and energy projects. Wages grow in regions where AI infrastructure expands. Local economies transform due to large-scale technology investment. This creates a positive feedback loop for regional development. Investors follow growth to these regions, intensifying momentum. Tech companies bring innovation, while energy firms bring stability. The fusion of stability and innovation defines America's next economic era. Investors increasingly choose companies operating at this intersection. They understand that the future belongs to those who bridge digital and physical worlds. AI represents the intelligence of the new economy. Energy represents the force that sustains it. Infrastructure represents the structure that holds it together. Together, they form a powerful triad of opportunity. America's economic ambition grows stronger with this convergence. This convergence will likely define investment trends for years to come. Investors who align themselves with this transformation position their portfolios for long-term success. AI continues to evolve rapidly, pushing the ecosystem to expand further. Energy systems adapt to handle new levels of digital demand. Infrastructure providers innovate to support next-generation computing. This alignment creates one of the strongest investment cycles in modern financial history. Portfolios positioned at this intersection stand to benefit the most. Those who understand the depth of this transformation gain a decisive edge. The dual rise of AI and energy marks the beginning of America's next economic chapter. AI's rise in America has reached a point where it no longer feels like a technology shift. It feels like a new industrial revolution. Every business, every investor, and every state is being reshaped by this acceleration. The forces driving this change are larger than any single company or sector. AI has become the engine of modern productivity and innovation. Energy has become the fuel powering that engine. Infrastructure has become the platform supporting it. Together, they create the foundation for America's future economic dominance. Investors now recognize that the AI boom is not temporary, it is structural. It is altering how industries operate and how capital flows. The digital and physical worlds are merging into one interconnected economy. Data centers are transforming into the factories of the future. Power grids are becoming the new highways of digital commerce. Battery systems act as the storage units of industrial intelligence. Pipelines provide steady fuel for the engines behind digital expansion. Cooling systems protect the heart of AI's computational core. Mining companies supply the minerals that make advanced hardware possible. Each layer strengthens the ecosystem that drives AI's capabilities. Investors who understand this architecture gain unprecedented advantage. They see value not only in front-end innovation but in back-end infrastructure. This mindset separates long-term winners from short-term speculators. The real opportunity lies in understanding connections others overlook. AI's future is determined by the physical systems that sustain it. Electricity is no longer just a utility. It is the currency of the digital world. Regions with abundant energy attract the most advanced AI projects. Utility companies become strategic partners in technological progress. Energy reliability influences where companies build their data centers. States investing in infrastructure become magnets for tech growth. This migration shapes the next wave of American economic power. Investors who follow these shifts position themselves ahead of market cycles. New opportunities emerge where AI and energy intersect. These intersections form the strongest growth zones in today's markets. Companies able to serve both digital and physical needs gain dominance. America's competitive edge depends on strengthening this dual system. AI expands the digital frontier, while energy expands the physical foundation. Together, they create a cycle of momentum that accelerates continuously. Every breakthrough in AI increases demand for more infrastructure. Every upgrade in infrastructure unlocks new layers of AI capability. The loop feeds itself with each passing year. This loop is what long-term investors analyze closely. It signals enduring stability beneath explosive innovation. It also reveals the hidden giants supporting America's tech expansion. Logistics firms, material suppliers, and grid companies grow quietly behind the scenes. These companies thrive as demand increases across multiple sectors. Their revenue becomes more predictable as AI adoption spreads. Investors gain both stability and strategic leverage by owning them. This dual benefit is rare in fast-evolving markets. Energy infrastructure stocks become anchors in AI-heavy portfolios. Renewable developers gain long-term contracts from tech companies. Battery manufacturers scale to meet national energy storage demands. Pipeline operators move essential fuel for power generation. Cooling technology becomes a prized necessity in data center construction. Industrial hardware manufacturers rise with every new facility built. Every part of America's physical economy benefits from AI's growth wave. This cross-sector synergy defines the next chapter of U.S. economic strategy. It marks a turning point for how wealth is created and sustained. America is positioning itself as the global leader in AI-powered industry. The transformation creates opportunities unlike any previous decade. Investors who understand the convergence gain unmatched insight. They see the future forming at the intersection of intelligence and energy. AI gives America the computational power to innovate. Energy gives America the strength to sustain that innovation. Infrastructure gives America the reach to scale it globally. This triad becomes the backbone of the 2026 economic landscape. Portfolios aligned with this triad enjoy growth across every cycle. Even market volatility cannot disrupt the structural momentum behind AI and energy. The fundamentals are too strong, and the demand is too deep. America's digital economy grows stronger with each new data center built. Its energy economy grows stronger with each new grid upgrade. Its infrastructure economy grows stronger with each new AI deployment. These layers rise together in synchronized motion. The end result is a future shaped not by speculation but by structural transformation. Investors who recognize this become part of America's most important financial shift. They position themselves at the center of the next technological era. AI may represent the intelligence of tomorrow, but energy represents its power. Infrastructure represents the stability that turns innovation into reality. Together, they form the strongest investment opportunity of the modern age. And as America enters 2026, this synergy defines not only markets but the future itself.